Welcome to the Strategy of the Week for December 6th, 2013. My name is Todd Schaefer, Manager of Research for VectorVest, and I'll be providing your strategy presentation this evening. The fastest horse usually wins the race, but consistency matters too. The Enhanced VectorVest Derby finds us both. I'll show you how in tonight's strategy titled, The Derby's Efficiency Edge. As the name implies, it is required that you have the Derby tool to take advantage of this strategy presentation. To make that easier for everyone, we are offering a 30-day free trial for real-time and the Derby tool if you need. To make that happen, simply call the product support department. Tonight's presentation will build off our previous introductory presentation of November 15th of this year, titled Making Money with the Enhanced VectorVest Derby. And so I encourage you to review this strategy presentation as well for more background and your introduction to the Derby tool. But let's get started with tonight's presentation and move into the program. From the home page, I'm going to take us into a market timing graph. Simply click on the Graphs tab. And here you can see I've set up a market timing graph with the price of the VectorVest composite only. In the presentation from the 15th, our Manager of Educational Services, Brian D'Amico, demonstrated how one could have used the Enhanced Derby Tote Board to find winning strategies on a signal date of October 11th, which was just after this market pivot in this most recent upturn. He demonstrated a technique that used the green light buyer signal after the low, which was here on October 11th. He used the 5-day period leading up to that signal date of the 11th to find the best performing searches and then monitored their performance from the signal date forward. For tonight's presentation, I'll use the same time frame, but I'm going to take a different approach that I think is even easier and still yields great results. Let's open the Derby Tote Board. To do that, we just swing up to the Derby tab, and from the Derby view, we'll change our view to the Tote Board. I'm going to change my entry price from the market open to the prior close. And what that does is it changes my analysis from the day's open to the day's close to the previous day's close to today's close, which means I'll include any gapping action that happened before the market opened. I'm interested in including that gapping action because I intend to hold these positions and I would capture those gaps. Next, I'm going to change my analysis mode to vary start date, and that's the only analysis mode we'll use in this example. I'm going to change my date range so that my signal date is on October 11th, and going back 5 days will begin on the 7th, and I'll click OK. Here we confirm that we're looking at a 5-day period leading up to that signal date of October 11. This replicates what Brian had demonstrated previously. An alternative method would be, and actually the one I prefer, is to start your analysis on the most recent pivot point. In this case, however, that would only provide 2 or 3 days of analysis, so Brian chose to use a 5-day period. Because we have a couple down days included in that mix, we do see that we have a mix of bull and bear winners in our Derby summary tool, which gives us a feel for the trend of that time frame. Minimizing the Derby summary gives me more real estate so that we can see the individual indicators in the Derby Tote Board. And quickly, the data available to us is the name of the search, the type of search, whether it's short or long, the number of stocks on average that the search found, the percentage of winners on average, the total percentage gain on average of each of those portfolios, the average annualized rate of return, the percent winning runs, the maximum drawdown on average, and the efficiency score on average. And remember, those are averages because if we click on Mini Rocket Short, you'll see that we ran a test on 5 different periods, changing the start date 1 day at a time, keeping the end date constant. And so we're looking for the searches that made the biggest average gain because we're sorting this database by the total percent gain or loss on average, descending. To use this data is very simple but very powerful. I first come down the type column and look for the type that matches my outlook, and I'm bullish now because I'm trading the green light buyer, and I want to make sure that the search consistently finds 10 stocks, so this number needs to be 10. So I'm going to skip Marathon, move down to El Cheapo Cheapos, which did find 10 stocks and had a total gain of 4.24%. That makes my list. Next down the list, I come to aggressive/CA, long with 10 positions, made 3.63%. Our third is aggressive, making 3.63, and aggressive small fry, 3.63. I noticed that all three of these have the same data points. So I'm going to assume that they're all finding the same stocks. So let's do this for more diversity within my offerings. I'm going to only take aggressive/CA and skip aggressive and aggressive small fry. Let's go down next to hottest growth stocks, which found 10 stocks, 3.51. That's our third portfolio. Fourth, El Cheapos, 10 stocks again at 3.31. And explosive EPS stocks 2 at 3.12. And to establish our frame of reference, our next step would be to change our analysis mode from vary the start date to buy and hold. And we'll change this date now from the 11th to current, which is in this case will be the close of last night's market. To make it easier to find our searches, we can sort them by name. And then I can scroll down to find El Cheapos. But to make it easier for us to analyze, I've transcribed these results onto a table. Here we have all of the searches in their original order. This is our buy and hold analysis starting on the 11th, going through the close of the market on the 5th. We see El Cheapos up 9.84% with an 8.78% drawdown. Aggressive/CA up 26% with a 5% drawdown. Hottest growth stocks over 30% with a 1.9% drawdown. El Cheapos up 21% with a 4.8% drawdown. And explosive EPS stocks 2, although it did rise before it fell, did pull back ultimately on the 5th to a loss of 2.3% with a 5% drawdown. And of course, this was with no money management. This is just point A to point B like a quick test. And so on average, we had a 16.97% gain, almost 17%, with an average drawdown of a little over 5%. So those all performed well, but we know the total gain doesn't tell the whole story. What about the winning trade percentage and the winning number of days? And what about the drawdown? Well, these questions are answered in our efficiency score. Let's go back to the tote board. Here we're back in the tote board. I've reset our dates to the original analysis period of the 7th through the 11th. We're sorted again by our default sort of percent gain or loss. The efficiency score, if you recall from our previous presentations, tries to answer that question of how did the search perform irrespective of its percentage gain loss. So we take the percentage of winners and the percentage of winning runs and the maximum drawdown and analyze the performance of the portfolio on that basis to derive the efficiency score. And as I can with any of these columns, I can resort this whole database simply by clicking on the column heading, and it'll bring to the top of the list the searches that had the strongest or highest efficiency scores. And as I would expect to see, the number or percentage of winners is much higher, percentage of winning runs consistently higher, the maximum drawdown consistently lower. So let's apply our same methodology where we look for the type to match our outlook, bullish, and it had to have 10 stocks on average. So our first contendant, best performing ETFs confirmed up, which had 1.77% gain. Best of the biggies, up 1.81%. Biggest bargains, up 1.55%. Pale blue chips, 1.52%. And rounding out the top 5, smooth sailing, up 2.15%. And something that might pop out to you right away, just if you're familiar with these searches tend to find more prudent to conservative, higher dollar kinds of stocks. Certainly more consistent performers, hence their better numbers for consistency or efficiency. So I next did our buy and hold analysis to these top 5 stocks, but let's just jump to the table where I've included them in our results. Running these searches, then we see the best performing ETF search made a gain of 3.7% with a drawdown of 3%. Best of the biggies up 6.5 with a drawdown of 2.5. Biggest bargains up almost 4 with a drawdown of 3. Pale blue chips over 7% with a drawdown of 2. And smooth sailing up 18% with a drawdown of 1. And we see then that we had an average gain across all the portfolios of 7.99% with an average drawdown of 2.43%. And what I can see easily, on average, I have about half of the gain, but I also suffered half the drawdown. To illustrate this concept even further, I created quick folios with each of these searches. Bringing us into the portfolios section of the program, I created a naming convention adding a Z prefix to all of the percent gain loss searches so that they would sort together in the portfolio manager. And so if we look at the equity curves of these portfolios as we flip through them, see how much bounce there is or how much volatility there is in the equity curve. And here, by the way, is explosive EPS stocks, which ended up losing, but we did still have a great opportunity to make some money here as it was up over 8% initially. And finally, highest growth stocks. Compare that performance visually with the high efficiency portfolios. And just as a general rule or a group, we see much smoother action in the higher efficiency equity curves. Of course, that's a trade-off that we're used to making. The more aggressive our temperament, the more risk we're willing to assume, and the more volatility we're willing to live with. And on the contrary, the more conservative we are, the less risk we'd like to assume and the more consistent performance, even if it is lower on a percentage basis. So if we go back to the tote board, we now have an approach for an aggressive trader, sorting the data by total percentage gain loss. A more conservative investor trader would sort by efficiency. But perhaps the best prudent approach would be to combine the best of both worlds. Look for the largest gainers on average that have the best efficiency scores, which in this case looks like the aggressive CA search. It had a 3.5% gain with only a 0.25% drawdown. If we go back and look at the portfolio, is that an equity curve that you could live with? And if we look at the stocks in the portfolio, we've got some nice double-digit gainers and one double-digit loser. And it's up overall in that current time frame 25%. And this is just another one of dozens of ways to capture the horsepower of this new tool. For more ideas, we've just published a new special report. If you go to the Views section and go to the Special Reports menu, 10 red-hot derby strategies for fast, consistent trading success. This special report available to you to generate even more ideas that you can try during your free trial. I think you'll be blown away by the possibilities of this new tool. Well, with that, we'll wrap up our strategy presentation for this evening. As always, I invite you to attend our live webcast on Monday at 11 a.m. Eastern Time. An open Q&A session for you to ask questions about this strategy or anything VectorVest. To register for that session, just go to the Views and click the link, or go to www.vectorvest.com and click the Events tab. Of course, if you have any questions, please feel free to call us at our 800 number in product support, and visit the university often for our strategy tutorials. And with that, I'll say thank you and good night.